Investment markets were mediocre over the past day, as effectively all global share markets fell over the past 24 hours. This did little to deter investment appetite for the Kiwi dollar, especially as the New Zealand Finance Minister Bill English did come on the wires from the UK about the New Zealand economy. He did suggest that the government is slightly unhappy with the high levels of the New Zealand dollar, and this is doing little to aid our export-led recovery. However, this does go along with global fundamentals, with the US dollar weak at the moment, and also New Zealand interest rates are relatively high. They are some of the highest in the developed world. This comes despite relative weakness in the New Zealand economy. He did suggest that New Zealand consumption levels are well back and savings are relatively high at the moment. Over the past 24 hours, the Kiwi dollar is still trading at 74.10 against the US. Over the past few months, we have begun to see the global economy decouple from the US. This is evident in the currency market, where the euro currency has begun to increase against the US dollar. The Kiwi and Australian dollars have also been strong against the US over the past 6 weeks. This will be important in coming years. If the US does fall back into negative territory, then this won't have such a major effect on global economic fundamentals. Investment flows have also been concentrating on developing countries, with major investment incomes being directed into the likes of China, Russia and Brazil over the past year or two. This is a trend that is likely to continue, and the US economy will likely remain fairly weak. This is a key reason why we see the New Zealand dollar remaining strong against the US over the medium term. New Zealand lamb schedule prices have been fairly flat over the past week, but they remain well above last year levels. UK prices are also looking pretty good, and demand for the Christmas trade season is also looking very strong. This does indicate to me that UK consumers can soak up slightly higher than normal prices, and the demand should remain strong in the coming year. Of some concern is a recent report that the UK government is going to cut some welfare spending for parts of their economy. This is an attempt to try and cut their budget deficit, but in any event, it will take a few dollars out of the wallets of UK lamb consumers. The full effects of this on the lamb market are not yet known, but it will be one to watch closely. We are still picking that New Zealand lamb schedule prices in the year ahead will be slightly better than last year levels, and that farmers should count on a lamb price in the mid $80 per head.